Hello, everyone. This is Software Journey with Learn to Code with Me. And today I'm excited to talk about Hive. I'll be going through all the Bitcoin miners, but I want to definitely focus on Hive since that's my largest position. And that's the company that I tend to be loading the most on. First thing to do is I just want to share with you the resources that I'm using to essentially analyze this company. What you would do is you would just Google Hive blockchain. And then from there, you would click on the first link, which is the company website. And then from there, you're able to go to the investor section. And here you can get information relating to what they want investors to see. And you may also look at their filings, which is just essentially the formalized version. This is where you can find the balance sheets and so forth. But for now, we're going to focus on this release. So this is going to be Hive Blockchain has reported its best quarter ever. So just go ahead and click on this link. I've already downloaded the PDF, and so we can reference that. But I just want to make sure that you understand what we're looking at. Now, as a reminder, before we go into this, this is not financial information. This is just for entertainment purposes only. So I do hope you enjoy why I think Hive is extremely undervalued, especially relative to other companies out there on the market. So the first slide we want to focus on is slide 6, the capital structure. So everything here is essentially the same except for the outstanding shares. So you might have heard that there was a 5-to-1 reverse split that took place. So instead of it being 400 million shares outstanding, now it's only 80 million shares outstanding, which is kind of nice for a comparison standpoint. And I'll have a video on the reverse split, just focusing on that in a bit. Now let's go ahead and look at slide 8. This is in reference to the Bitcoin network hash rate. So this just means that it's been increasing the amount of computers online that each company has. And in order to stay competitive, in order to mine the same amount of coins that you were mining yesterday, you have to increase your capacity. That's what it's saying. So it's getting harder to mine every single day. And if you want to stay competitive, you have to make sure to increase your hash rate. And that's what a lot of these slides also entail, that they're increasing their capacity. And that's why they're able to mine more and more. I believe most recently I mined about 450 Bitcoin per month. The next slide that I want to focus on is on slide 18. All of this is good. This is talking a little bit about Ethereum. This company mines both Bitcoin and Ethereum, but I like to just think of it in Bitcoin equivalents, just so we can think of it as just one security instead of kind of dividing our attention between two, because then the math can get a little confusing. So with respect to slide 18, we can see that revenue has significantly increased. And this is actually somewhat deceiving in a good way, because what happens is when they report their revenues, they also have to take into account the fluctuation of Bitcoin prices. Now, we've seen recently that Bitcoin prices have declined. And so this revenue that they've received, that's even with the decline of Bitcoin prices. So let's consider an example. Let's say, for example, I'm a company and I have 100 million in Bitcoin that I have in my balance sheet. And then within the next month, let's say I don't mine any Bitcoin. I still have that 100 million, but Bitcoin's price halved. Now I have only 50 million worth of Bitcoin on my balance sheet. And so the way that it has to be reported as it stands is that would be a $50 million loss in revenue. Okay, so just know that these values are not as a little bit deceiving. So that's just one thing to consider. So they're mining just substantial amounts. Now, for the next part that I want to focus on is going to be slide 19. Slide 19 shows that within the past quarter that they've mined about 700 Bitcoin. That's exclusively Bitcoin. Oh no, that's yeah. So that's 700 Bitcoin. However, that's going to be about 233 per month. You also have to consider that this company also mines Ethereum, and so we have to think of it in Bitcoin equivalents, not just focusing on the Bitcoin, but the Ethereum as well, converting that over to Bitcoin, and that's how you get the 400 plus Bitcoins that it mines per month. The next slide to look at is going to be slide 20. You can see here that on their balance sheet, they have 168 million in Bitcoin equivalents. This is all of the Bitcoin that they mined, and this is essentially as good as cash. This is completely liquid. They could sell it and have cash on hand. They can borrow against it, right, if they want to go ahead and get some more financing so that they can procure more machines and increase their hash rate. As we mentioned, you have to increase to stay competitive. So they have a lot of money on hand. Apart from, they also have cash on hand, which we'll see in a moment. So they have both cash and also Bitcoin that they're hodling, right? And the reason that they do that is also they speculate that Bitcoin prices will go up. And as I'm sure many people do believe that Bitcoin prices will go up. And so that's why they're more hopeful that, say, for example, if it were to double in price or increase in price, then also their balance sheet would also increase in price, because those assets, this amount of money would be worth more, right? This 168 would increase in price in proportion to the increase in Bitcoin. So lots of money available, which makes for a strong balance sheet, which we'll see in just a moment. So now on slide 23, we see about their infrastructure. This is incredibly important because it's not just about ordering the machines. You also have to make sure you have facilities to plug in those machines to have sufficient power. And, you know, these machines, or these rigs, consume how should I say, a large amount of power. And so you have to make sure to have that infrastructure ready. And you also want to make sure that you're mining as efficiently as possible. Now, I'm not sure if you know this, but this company takes place in Canada. And so there, the temperatures can be a bit chillier, which is perfect because a huge source of energy cost is making sure to cool the machines. Otherwise, you know, they can get a little bit too hot. So say, for example, if your computer's ever got too hot, it could burn itself out. So cooling is a very important aspect of Bitcoin mining. And that's why just the environment itself is great for maintaining those cooling costs low. So that's another thing to consider. So definitely expanding as it is. This is just showing that their exahash is increasing, that they plan to continue to increase and so forth. But I want to focus on slide 25. There we go. If we take a look at slide 25, January production is 425 Bitcoin produced. So this is Bitcoin equivalent. So that means on top of their, I don't know, I would say like 230, 250 Bitcoin exclusively that they mined, there's also another probably 200 Bitcoin equivalent from Ethereum. So that's how they get to the total of 425 Bitcoin equivalents produced. So I think they might have left out that word, but that should be Bitcoin equivalents. And recently it's more around 450. So they're staying on track. Not only are they staying on track, but they're increasing their Bitcoin that's produced. So that's even more revenue, that's more profit that's coming in every single month. Let's go over to slide 30. And so on slide 30, this is what their balance sheet looks like. This is just a pretty excellent balance sheet, in my opinion. So not only do they have cash on hand for operations, so they wouldn't need to take out, you know, debt to be able to finance their existing operations, but they also have 168 million in Bitcoin equivalents. So this is both Bitcoin and Ethereum. So let's just call it as 168 million in Bitcoin. This is as good as cash. They can go ahead and sell it and just have cash on hand, and they can pay for any, you know, debt they have outstanding. They could pay for any machines that they want to buy to go ahead and start increasing their operation size and mine effectively more Bitcoin. So you can see that they're in an incredibly healthy space. They also have 268 million in assets. So this also includes their current infrastructure. So all of the machines that they have currently, and this is all relative. So all of these are positives relative to their liabilities of 15 million. So they owe a debt of $15 million while they have 63 million cash on hand, and they also have 168 million. Effectively, you could think of it as cash because they could just swap that in the market and get cash on hand. So they can pay this off several times over. This is a quick ratio of about 17. So that means that they have 17 times the amount to pay it off. So let's say that you owe like $1,000 this month for rent. That's all your debt, $1,000. And imagine you have 17,000 in your account. Well, you're feeling extremely comfortable. You're not worried about going bankrupt. So that's an exceptionally good place to be in. Now, the most important slide that I want to mention is going to be slide 31. Slide 31 shows that they are an extremely profitable company, especially relative to their market cap. So this is just amazing, just because they're looking at about 60 plus million in profit, not revenue, but profit itself. The revenue is actually going to be, actually, if we go back to slide 18, I just want to do some math for you just to go ahead and show what's going on. So this is the revenue, 68 million. Now of that, let's say let's just be conservative, extremely conservative, and say that 70% of that is the margin. So that's 47 million, 47 million per quarter. If we multiply that by 4, you get 190 million per year that they would be making. 190 million per year, and they only have an existing market cap. And so if you don't believe me, go ahead and look at it. So this is the Hive market cap. You can see that their market cap is only about 415 million, about 400 mil. And what did I say? I said that they're mining about, or they're going to make about 190 million per year. So that means if you do that division, 415 divided by 190, you could see that in, actually, let's do that just so you can see it. So 415 divided by 190, you could see in 2.18, right? 2.2 years, they're going to have enough money to double, essentially to buy over their operations once again, right? So you could just kind of thinking about that. This company is in an incredibly good place to, continue with its profitability to essentially buy itself out in about 2.2 years. That's almost unheard of to be valued at these prices that they are. And that's why I think this is such an amazing case for why I'm loading the boat, why I think it's so highly undervalued. But once again, I'm not informing you to purchase these shares, but I'm just saying that, in my opinion, I think it's an incredibly good deal. That's why I've been loading thousands of shares recently. So aside from slide 30, let's go ahead and take a look at slide 31. This is, once again, it's showing its strong profit of $61 million per quarter. And so once again, if you go ahead and actually, if you were to go ahead and multiply this by 4, you would see a profit of about $240 million. However, I was being conservative on it. I said about $190 million. So even at a conservative amount, this is just insanely good profitability. And the reason why I'm so focused on profitability is that there's a lot of companies that are on the verge of reaching possibility, or perhaps they're even negative. And people invest in those companies, which is fine, especially if they have large growth opportunities. But why purchase those companies when you already have one that's extremely profitable and can make its own money in about 2 years, right? So it doesn't really track for me. I tend to look at the companies that make more logical sense from a value standpoint. Now let's go ahead and go to the last slide of interest, and that's going to be slide 38. This just shows you the net income. Once again, this is just kind of hammering down that profitability, how much it's making per quarter. And if you extrapolate that out, because Hive is continually adding more miners, because Hive is, making good on its plan. I mean, once you have the miners connected, it's all about just maintenance, letting them run, and it's essentially a money printer. That's what it is. Every month it's just making money. So long as Bitcoin's price remains stable. Right now, it looks like it's holding around 30K, 29K, but I like to just round it to 30. And to be honest, I'm of the opinion that I think over time it will increase in value, because there's only a finite amount of Bitcoin that will exist. And the more and more people that get into it, the more and more that people would be willing to pay for it. Now, the other slide that I want to focus on is, and this is going to be Hive blockchain announces a 5-to-1 share consolidation. If you've seen that already, or heard of that, I'm going to explain that in my next video. But one thing I want to focus on is this statement. Despite our record profitability, Hive shares trade at around a PE of 2.2 as of May 23rd. So just a few days ago, I was trading at a PE of around 2.2. It is still, I believe, still trading around there, PE ratio of 2.2. That means for every $1 that Hive earns, you're paying $2.2. Now, I don't know if you're familiar with this metric, but typically a good PE ratio, the smaller it is, the better it is for you, right? That's just a way to see if a company is undervalued. 10 in general is good for a value stock. 20 plus is good for a growth stock. And so once again, the lower it is, the better it is. So this means this has a value way under that, right? So 5 times less than what a value stock would be of 10. So this is only 2. extremely undervalued. This means that for every $1 of earnings, you're paying only $2.2. So that means in 2.2 years, you would recoup essentially your investment on this company. That's just phenomenal. And so enough about my talk on Hive. I just think this is a wonderful company. I really hope that you enjoyed. So if you're wondering what's going on with Hive, there's been a lot of FUD going around. Just know that if you look into the fundamentals, if you look into the financials, that all of that doesn't really make any sense what they're saying. And you can point out the numbers and ask them to bring their financials and ask really what it is they believe would hamper the price. If they can't respond with anything, with any actual factual information, then just feel free to ignore them. That being said, I hope you enjoyed this presentation. I really look forward to making more content. So please hit the like and subscribe. I'm really excited to make more of these videos. Thank you so much for watching, and hope you have a wonderful day.